All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market's going through a pretty historic phase right now. We've talked plenty about the market and what's going on and how it's happening. But want to focus here in this video on the challenge progression, the challenge future, some of the questions that have been asked about the challenge, and really kind of discuss the challenge in this current market environment and even in every possible market environment. But let's go back to what the challenge purpose is. Challenge purpose is for freedom, both financial and time. What does that mean? Well, we want a system that can take small amounts of money and generate cash, right? Generate gains over time with some big upside potential. Knowing we're not going to hit that upside always, but we should, even when we're not hitting that upside, we should be still generating gains. Then time freedom. We shouldn't have to sit at our computer all day, every day going, I wonder when the next trade is. Man, what's this going to do? Oh, what about this trade? Sitting there making 20, 30, 40 trades a month and making it a full-time job. That's not why most of us got into trading. It's kind of a byproduct that a lot of traders get into. They turn it into a big job because they're always trying to go out and analyze different things. But the reality, we all get into trading for what? Some time freedom, and we don't need to be tied to the computer all day, every day, looking for trades. So the purpose of the challenge is to attain both of these things. How does it do it? Well, we're doing it here with an algorithm that looks for a high probability of a 2 ATR trend move. Just kind of what I have down here on the screen. What do trade signals look for? High probability of a 2 ATR trend move. What's an ATR? Average true range. So we're looking for a trend to emerge. Notice here how it doesn't say anything about we're trying to predict what the stock's going to do the next day, or what the market's going to do the next day, or what the price of tea in China has to do with the price of oil in Saudi Arabia. It doesn't have anything to do with that. Has everything to do with a specific watch list and looking for a high probability of average true range moves. Okay, great. What do signals not look for? Well, just like I mentioned, what's going to happen tomorrow? They don't look for smaller oscillations. They also do not look for anomalies. There's this idea in the market that people have, and based on hindsight bias, is, man, if I could have caught that move. Something historic happens, or a company gets bought out, or a company declares bankruptcy, and everyone looks, or a pharmaceutical has a new drug come out, and the stock is up 300%. Everybody looks, man, what should I have known yesterday to make me get into that move? And it really isn't something that's a repeatable process. There are just anomalies that happen out there. And trade signals do not look for those anomalies. Why? Well, I have no idea how to find them. I have no idea how to consistently predict anomalies. If anybody does, let me know. But, it is one of those where there are anomalies because they aren't consistent, because they aren't predictable, and the algorithm doesn't look for those. Now, you know all these things. All these things we've talked about, many different times over the lifespan of the current challenge. But the current market itself brings in some questions, and some questions that have come in and some comments that have come in, and I want to discuss those, and I want to discuss what we're going to be doing with the challenge going forward, given the current market environment and what it is. Let's come here to the trade data. Let's take a look at comment number 1. And I have these comments down here below listed. But comment number 1, the challenge algorithm doesn't work in this market. Which is something that depends on kind of how you're looking at it. How was the challenge algorithm built? Challenge algorithm was built to get into highly probable moves not to predict anomalies. What have we had happen in the market over the last, 2.5 weeks? Something pretty historic. Absolutely historic. Could we go out 3 weeks ago and predict that the VIX was going to go up to 70? Been laughed off video. Yeah, had I gotten on video, I said, yep, here's the argument for the VIX going to 70. Come on, really? That's not a normal process. If we go back, the VIX has only come up here one other time in the last 20 years. And that's in the financial crisis. It's an absolute anomaly. So to say the challenge algo doesn't work in this market isn't understanding what the algorithm is built for. Notice how the algorithm is not taking a bath during this market. Hasn't been hit hard, hasn't taken losses, hasn't dealt with what a lot of people are dealing with out there. It hasn't been trying to bottom pick and then waking up the next day to a big drop. Hasn't been chasing big pops and then waking up to big drops. Hasn't been buying big drops, puts on big drops and waking up to big pops. It hasn't been dealing in all the historical volatility and randomness of some of the short-term price action out there. The challenge is working. The algorithm is built to avoid those types of situations. It's built to be outside of the anomalies and to not take a bath during those anomalies. The algorithm is doing exactly what it is intended to do in this market. It's not intended to give us a trade every day or, a new signal every day. It's not built that way. It's not built to handle anomalies that come in. Now it's built to react well when the anomalies fade and when normal situations return, and ultimately that will happen, and the challenge will react well to it, and we'll be off and running. The other thing, the challenge algorithm needs more trades. This is something I hear a lot. Since we issued the algorithm, and it gets outside of that element of patience and freedom. One of the nice things about the algorithm, we don't need millions of trades to make it work. We can make it work with very few trades. It's not a numbers game in terms of the number of trades. If we do X number of trades, our gains are going to be Y. And if we increase X, then Y increases. In many cases, we increase X, Y will actually decrease, which is not what we're looking for. And so the trade rhythm that the challenge has had since its inception, since March, is about the normal pace that I expect it to have over time. And what we have had with the challenge algorithm before we released it in all of our testing and all of our kind of experimentation, real-time testing there with it. So the algo doesn't need more trades. The challenge algo needs to handle all markets. Well, I get that. I get why somebody would say that the challenge algorithm needs to handle all markets, but I've never seen one that does. It's one of those things where markets change, markets shift, they're dynamic, and the challenge algorithm has a dynamic nature to it to where it can shift based on how the market is shifting, based on how the price action on individual stocks is shifting. That said, it's not built to handle the absolute anomalies. The 1 in 12 years, the 1 in 20 years, the 1 in 50 year type of situation. It's not built to handle it in terms of giving more trades during that time. It's built to handle it by backing away because it's low probability and saying, we'll wait for high probability. One of the things that makes calling moves in a market like this low probability for option traders is the value of the options. They're insane. They're not very tradable, and we'll get to that in a little bit. But when it comes down to it, the algorithm right now and in this market is absolutely doing its job in every way, shape, and form that it was designed to do. Patience, cash, those are trades. Those are sometimes the most valuable trades that are out there, and right now, they're very valuable. When you look, and I've had several comments from members, and it's one of those where I hope you're not in this group, but I know several of you are, where you've been jumping in, putting money into this market, trying to guess this move, trying to make that move, and it's been brutal, and it's led to a pretty significant drawdown in your accounts. That's not something that I'm willing to do for the challenge, or the algorithm is built to do for the challenge. So it goes back to looking for highly probable moves. And what's the probability of what has happened in the market over the last 3 weeks? Coronavirus, global pandemic, all this, shutting down of sports facilities, of airline, of travel, cruise ships, just mass shutting downs. What's the probability of that happening? Well, very, very slim. If we're out there trying to predict that each and every day over the last 12 years, how often are we right? Almost never. Right? So the algorithm is doing absolutely what it is intended to do. It is working. It is not going to be changed. It's not going to be adjusted to try to, tweak for this historical anomaly. If we look since the challenge algorithm inception back in May of last year, there are just over $10,000 worth of gains in the challenge. Just over $10,000. So with $3,000 risk, just over about $10,000 in gains. That is not the mark that we're aiming for, right? We're aiming for a higher mark. But at the same time, given everything the market has gone through during this time period, that's a pretty decent number, and I'll take it. Especially knowing that had I run several trades with the algorithm parameters rather than stepping in personally and saying, I'm not comfortable with this risk and pulling it off, those gains would be significantly greater. We go back to the first algorithmic challenge with Visa and Pepsi. We go back to this challenge with Starbucks and Halliburton. The gains would be significantly greater had I trusted the algorithm rather than stepping in at these key moments and saying, all right, I'm going to pull off the risk and go. Which is a different topic of conversation, but it is one that just reinforces the value of the algorithm and why I'm not going to step away from the algorithm, why I'm not going to sit and go, oh, well, you know what, let's tweak it here, let's adjust it here, or, let's try to find something in this market. How often do we get this type of market? So how much data do we really have to find a consistent pattern? There isn't. The one thing we know about historical events is there's a lot of inconsistency throughout those events. We've talked about a few ideas in-house of what to do during this time period because I know today we're not going to have any trade signal. It's just not going to happen. Trade signals are built on 3-7 crossovers, and we're not getting 3-7 crossovers. And let's face it, the next batch of crossovers are probably going to be to the upside, and most of those coming off of new lows. So the chance of having a challenge signal on those is very slim. So I know this week, challenge signal probably isn't going to happen. The way things are going next week, challenge signal probably isn't going to happen. But patience and cash are trades, and those are the trades I will opt for in those times. Now, I talked when this first started that I would, that I would use the market vibe as something that we can use to jump into a trade if things set up. And sorry, I don't have the link there with me, but that we'd use the market vibe to jump in and buy some upside on the market if and when we saw the market vibe turn bullish. And I will still do that. I will still do that with the challenge. Probably put 1,500 to 2 grand into it, just simply because we're not going to see individual challenge triggers when that happens, most likely. And so I will do that. But that is going to be the process. We're not going to change the algorithm going forward. We're not going to change how it's built, how it's set up, the number of signals that's coming, the rate of signals, how we handle different things. Why? Because it's working. And a market like this, a historic market that comes out of the blue, I promise you, if I were trading personally the challenge, I would have taken a pretty big hit because I would have stepped in on some overvalued options a few times and, had some struggle with them. Personally, I've had a little bit of success during this time, but not on trades that are even realistic to send out in real time. Right? Not only do challenge trades have to, get triggers, be good probabilities, good option values to put the odds in our favor, there has to be a little bit of a stable environment for others to get the same fill prices or similar fill prices. In a market that's moving 90 points in 7 minutes on the S&P, it's anything but stable. And the option values and the spreads create a huge differential in what fill prices are going to be across the board. There's no value in that. There's no real upside there to it. And so the logistical elements of being in a market that is trading at this pace are a whole nother, ball of wax. And so the challenge algorithm is doing everything that it is designed to do here during this time. And to the last argument here, and I don't have it on here, of, the challenge algorithm isn't outperforming the market. Here is May of last year when the challenge algorithm started, and where we started with 3,000. And in total, we have $10,000 worth of gains on the challenge where things sit now. Are we outperforming the market? Oh, just a little bit. Challenge is up over 300%, and market is now down many percent, and still looking to fall. Ultimately, this is what it was built for. This is what it's designed for. It still has the upside potential in it that we will always be seeking and looking for. But we're not going to look for that upside potential in a market that's in crash mode, 1987 style crash mode, where we're talking about something that happens once or twice in a generation, not once or twice a month, where we get something much more predictable. I appreciate you being with us here at Trader Minute. It's great having you. I appreciate the feedback. It definitely helps. And hopefully, this video helps to kind of understand where the challenge is, what I'm thinking about doing with the challenge going forward, and what is going to be changed in the challenge. And the reality is it's going to continue to run the way that it is and the way that it has been. And that will be the future of the challenge. I'm very excited about that. And that doesn't mean, that the next 2 weeks are going to be super exciting with brand new trades to jump into and to get into. But as soon as they trigger, I will absolutely be jumping in and, enjoying the process once again. Again, thanks for being with us. Have yourselves a fantastic day, and we'll talk to you later. Take care.